Good morning, traders. Thank God it's Friday. Cayman, I will be your host today. Ryan is off for the long weekend, so we will be, as Michael say, I will be flying solo. So hopefully the wind will blow me in the right direction for you all. Um, let's, without any delay, start the show then. And first, before we dive into the news and the data, let me remind you that we have a couple of days left to take advantage of our liberation offer, where you get 40% discount on your monthly subscriptions. We've had many new people in our chat room, in our community, which is obviously great to see. Let's hope that we can help you out all, and that especially our other contributors as well. They help people out as well. You will see it's a great community. You should really take advantage of this offer, and at least come and try us out. We also have another couple of days of discounts running on the trader funding program. I'm putting the link in the chat room right now, if I can. Oops, no. Yeah, there we go. I think, yeah. So if you click the link, you will see it will take you to the page and where you can get that discount. Also, watch the video that Blake has put together to guide you through the process and help you in setting it up, talking about the community as well. So that's a very interesting video to watch as well. And we are still doing our one-on-one mentoring for those who feel they need a bit of help along the way to become a better trader when you're struggling with whatever struggles you may find along your trading road. You can always um, call us, appeal to our experience. If you look at this group of people here, I don't know exactly, but there must be not far from 2.5, 3 centuries or so of experience in the market. Okay, let's not go too wild, K. I mean, call it 2 centuries of experience to help you all out. That's it for the commercials. Let's dive into what has happened overnight and what is expected to happen for the rest of the session. So first of all, a bit of headlines. Let's start in China. The PBOC injected a bit of liquidity again overnight, saying that they will keep a moderately loose policy going. We know that, but it did not have a lot of effect on the Chinese yuan. What did perhaps have a little bit of effect is that those US and Chinese officials just found it necessary to confirm that they continue to talk together, open lines of communications, and talk about their mutual business. The market took it as a bit of a positive move for the CNH right now. We're trading below 720 on the dollar CNH. It's also a factor of a lower dollar that we saw overnight, which I will come back to a bit later. We had a few Fed speakers. Actually, we had a lot of central bank speakers out yesterday because um, officials, treasurers, central bankers, they were all in Canada yesterday, and they all found it obviously necessary to speak to the press and give their own opinions about everything that is going on. So we had comments from I think he was there as well, but I'm not overly sure. But we had comments from Waller and from Williams, both relatively saying the same things. Waller specifically talked about the tax bill. That is, in his opinion, appearing to be driving up the borrowing costs against that door. Um, he thought that the growth prospects were pretty good. His own interpretation of what's going on in the yields and for the Fed, for the rates, he thinks that it is possible that we see a cut in the second half of this year. So really rejoins what most of the Fed speakers have been saying right now. Wait and see attitude, see what the impact will be of tariffs, of the bill, of more receipts. Will it support the local businesses as well and give enough growth to the U.S. economy to compensate for those higher fiscal holes and higher US debt, which the market is still not on board with that idea because, as we have been already saying over the past sessions, is that the yields, especially on the long end, are still very, very much in demand, and we are trading at very lofty levels. But for the time being, the central bankers globally, they are trying to maybe calm the markets by saying they are not really at the state of alarm yet. Although, as I said, we heard from a lot of other central bankers. Lagarde we heard, Nagel we heard of, to talk about the ECB ones, and they are all monitoring the situation as well. And Lagarde had an interesting comment, which she already hinted at earlier last week, I think, is that the international trade, according to her, will never be the same again. So the expectations are the central bankers are monitoring this whole episode, thinking that there are going to be, whatever happens, there are going to be big changes happening in international trade, things that they will obviously need to monitor for potential inflation pushes here and there, and also looking at how that will affect growth across the several different regions. Nagel and Lagarde both had this similar comment over the past week, saying that it appears that the euro is gaining some traction because of what is happening. And Nagel said he thinks that it's a normal process in what we are experiencing now, and that he sees the appeal in the euro right now. And Lagarde said something similar earlier, I think earlier in the week or late last week, saying that she also finds it a bit of a normal process that the euro is gaining some traction because the market is doubting is perhaps a big word, but actually, yeah, I mean, trying to figure out or they are concerned about what it may mean for the U.S. growth in the shorter term. So the euro is getting that bit of traction, and it is noteworthy that the ECB members are not fighting against this because usually um, the ECBers are not really pushing for a high euro, but this time they are not fighting against the moves that we see right now in the euro, which is relatively interesting, I would say. Um, Brings us over to the G7 statement. Very low expectations for having big changes in the statement, but there were a couple of points that the market was looking at to see whether they would talk about it. And one obviously was the effects. They did not change anything to the 2017 agreement that they reached, so back 8 years ago, that they reached. So the same lines came back saying that FX should not be used to competitively influence markets and economies. So they they are not supporting the competitive devaluation of currencies. The currency should remain free floating. That is after what we heard from the US or the expectations for the US and Trump even openly saying as well that they wanted a lower dollar and lower yields. So the G7 did not give in to that part, but where they went some way to please the US is that they incorporated the line saying that the G7 wants to reduce unsustainable macro imbalances. So that is rather going US way, but obviously the EU is also supporting that because they also have deficits with notably China, of course. And that is some going some way to tell China that they now should really do something about the trade imbalances. So that was noteworthy. Afterwards, we had actually comments from Maclem, who was also present at the G7, and he actually in words confirmed it that the imbalances with China were just too big and something should be done about it. So that was the interesting bit. Furthermore, they still support Ukraine, as we know from prior G7, G20 meetings, that they still support the Ukraine against the Russian invasion. That for the G7. Elsewhere, the US bill got voted yesterday. We saw a blip in those yields on the back of it as well, but that proved to be kind of short-lived. I think the market is really wanting to see exactly what is going to happen with money, okay? Debt versus receivings versus taxes versus income from tariffs, etc., etc. We're in this phase now where the bill it had a really minor impact. It was perhaps um, behind some of the US dollar buying that we saw yesterday, but I'm going to have a look at yields in the dollar, obviously, later on in the show, because the development in the dollar was relatively interesting yesterday, so we have to really talk about that a bit later on. Let me look at my sheet. Yes, we've got the ECB minutes out yesterday as well. Those were clearly pointing at most of them still thinking that the uncertainty is high enough to go for a next rate cut, and that would be in what is it? When is the next time they meet the ECB? Actually, on the 5th of June. Not too long to wait for that anymore, but it does seem that the majority, at least, was still hinting at a rate cut coming in June. Right, and that is, oh no, there was an interesting one as well, because we know that Trump wanted to get rid of some officials, and even some top officials, right? And that was really looking at the Fed, and the U.S. Supreme Court actually protected the Fed yesterday from Trump being able to sack top officials. The line that they used there was that the Federal Reserve is a uniquely structured quasi-private entity that follows the tradition of the first and the second banks of the U.S. So that clearly tells Trump you are not going to fire top officials. He was not really pointing at Powell, but of course the market views this as a clear message that he should not be firing Powell anytime soon. So that's it for the main headlines right now. I am going to talk about UEDA, but I'm going to talk about UEDA when we will be looking at the Japanese CPI, which is a quite remarkable set of data that came out overnight. Okay, yesterday, PMIs actually pretty okay. The dollar got a bit of support there as well on the back of those for another few hours, okay, for another few hours. And then the picture started to change again, okay. We had a few of those auctions out. I would argue nothing much to see there, although the balance of takers in the tips auction was not the best. We did not really have a big variation there on the expectations, but we could argue that having to pay this kind of interest rates on the inflation linked bonds is pretty hefty. So that is something that the market was likely using as an excuse for perhaps starting to reverse the dollar again. Balance sheet as expected, the runoff continues at the rate where it is expected to be. Um, a bit of an increase in reserve balances with the Fed again. Yeah, nothing much to see there, but it also points that that little increase is also taking us perhaps that little bit away from stress levels, because we know that those reserve balances. Let's have a quick look at how they have evolved over the past let's say over the past 2 years. Okay, they had been starting to come back as we have seen here, and the market was like thinking, okay, I mean, is this going? Are we going to get to levels where it's going to be becoming a bit of too little? Well, no. Okay, they have been steadily building up again, so I'd say nothing to see there, no stress there for the time being. I don't think we should read too much into that. Okay. Over to Kiwi land, the retail sales slightly positive, a little bit less than expected, but the quarter-on-quarter Q1 retail sales are doing okay, a bit better than expectations. But again, Q1 data, I think we can safely shrug those off and look at what's happening this quarter. Um, Consumer confidence in the UK a bit better than the prior ones, and straight away going to look at the retail sales. The retail sales were good. Okay, in April the retail sales were good. We had this prior month which also showed good numbers, but they have been revised lower. So that is something that we need to get used to as well. And this is also the UK now with the how should I say? People are a little bit in the market, at least, reluctant to believe everything that they see in the UK data. And as a matter of fact, they have been revised a bit lower. But taking at face value, these are pretty decent numbers. All right. So that is something that is also underpinning the sterling right now. Then over to the Japanese CPI. Core CPI much higher than would be comfortable. So Ueda also spoke in at the G7, and he said that he, for the time being, the Bank of Japan is not going to react to very short-term moves in those long-term yields. So that is one interesting thing. There has been a discussion in our room. Is this a change of tone compared to when the Bank of Japan was saying that they would monitor the yields for potentially unscheduled bond buying? I don't think it's a change of tone. It's not a change in official Bank of Japan language. I still think that they would be ready to buy unscheduled bonds if needed, but the time is just not there yet, because that is what it means when Ueda said short-term moves. So to come back on the CPI then, looking at that data, where the market is expecting the Bank of Japan to hike rates only in the latter part of this year, I don't want to rule out what is it, June 17th of June. Looking at my sheet, I don't want to rule it out, especially also when Ueda says that they are ready to look through short-term moves in those interest rate spikes. That does not hint at the Bank of Japan wanting to immediately stop um, hiking rates because of that. Okay, so this is something I think we need to keep in mind for going into June, especially for the Bank of Japan. I don't think that we should completely rule out June personally. Okay, and then we had a pleasant surprise on the German GDP. Okay, again, Q1, a lot of front running of what may come, so that will have had an impact on the GDP. But let's uh, clutch at that straw, as they say. It is still a positive number, and it is helping the euro as well this morning, because we've been talking so often about the main engine of Europe sputtering. Um, so when we get slightly better numbers, let's enjoy those and take them at the value that they are. Are they out of the woods? By no means. Okay, we will see what the second quarter will bring. Actually, the ECB expectations were for a second quarter to be relatively okay on the GDP front, but perhaps against us again a slowdown from the second half. So let's see what the second quarter numbers are going to bring. But at least this for now is underpinning the euro as well. Okay, the French consumer confidence in May, that is that is a second quarter data number, and of course, with the tariffs being slapped onto Europe, actually about those tariffs, Trump said he's pushing the eurozone as well to cut tariffs or face more duties. That's what he said also overnight. And obviously, consumer confidence in the eurozone is kind of expected, for as long as there's so much uncertainty surrounding tariffs, to be sluggish at best. Okay, so that is what happened over the data. What's coming out later on? March Canadian retail sales. Okay, I am going to have a look at the dollar Canada today, guys, because we are back in an interesting zone for what I'm concerned, at least. So those Canadian retail sales, even though they are March again ahead of the tariff announcements, but we know that the discussions between the U.S., Canada, Mexico, but the U.S. and Canada were ongoing already well before the additional tariff announcement. So they may be interesting enough to have a look at. We will have more Fed speakers on. We will have Schnabel again on. Schnabel also was one that said she understood why the euro had a certain appeal. So that's later in the day. Keep an eye on those ones. She, in case that she speaks positive about the euro again. And we have the US new home sales. Regarding those home sales, yesterday we had a few numbers out of the US as well. The existing home sales, okay, small variation, only 0.5% of variation, okay. I think for the home sales to really have an impact, we should see really big variations, okay. They are expected to come down. So any confirmation of this being Friday, having had the moves that we had so far, they may put some additional pressure on the dollar perhaps this afternoon. And that's it for the headlines. Let's move over to what is happening in markets. Give me just 1 second. I need a sip of water. Okay, here we go. Yes, Mike, and good morning, Ali. I will go over a number of charts today. Being on my own, Ryan not off, I'm going to try and cover a few charts. Okay, euro dollar yesterday was looking fragile. Dollar was bought across the board for various reasons, but it held sort of where it had to hold. Mentioning those two levels all the time, and 112 20 112 60 70, and then the 112.20, right? This line here where it held the prior time. So those are the two levels, and the first major one already held. I'd say that's a positive. We're seeing the dollar weaken across the board, but the euro is doing relatively well. And I will talk about another one which is doing really well as well. Actually, a couple, but this one is a rather positive development again for the euro. We are still in what we would call maybe a flag or so, but also a bit of a channel. So the top side remains still untested around 113.80, but we are gradually getting there. Okay, so we have this prior high 113.60, 65, and then 113.80. I really think if you want confirmation, 113.95, but 113.80 is an important level for me. We have been trading that in the past. It has banged his head against it earlier in May, so that is an important level. If that would go over the course of a day, ahead of a long weekend as well. Let's not forget that we are ahead of a long weekend. People may want to press their positions ahead of the long weekend, or those who have been buying dollars here maybe not keep it. But if you look at the moves that we had and the continuation, a Friday ahead of a long weekend can either be that we fall flat dead for the rest of for the US session, but there is a risk that we are going for a bit of a walk here in the euro dollar. Okay, main supports, as I said, remain the same. Intraday perhaps already around 113. 1520. Keep an eye on that level as well. Perhaps that's already a bit of an intraday level there to keep an eye on. But it does look positive in my opinion. And another one that is really positive now, and again, is the sterling. Um, about the sterling. First of all, look at the chart. We had a couple of tries here earlier this week, just below 134, and straight away found buyers. Okay, 1, 2, 3 attempts. Yesterday again an attempt, and we found buyers, and we are trading back up. Not only do we trade back up above 134, 40, 45, but we also tackled the prior high around 134.65, which saw that pretty steep rejection then. About the sterling, I thought earlier in the week that sterling may actually lose a bit of its shine, and people listening to here or being in our chat room, they know that for that reason, I've cut my shorts euro sterling. But then really, sterling is finding support. Obviously, today also helped by those data supporting it, but also a weaker dollar, obviously. But it is one of the better currencies. And I was talking to one of our mates in the chat room this morning, and that is something that I always do, is when you have a bias in one currency, let's say for instance the dollar in this case, you always look at the ones. I always try to find the pair where I have potentially the most success rate to be short dollars against, and the sterling is still definitely one of those currencies. So yesterday, after a day of reflection and seeing how the euro sterling moved, I decided to go to get back long cable because it's just too bit below 134. Where can we go to? Just up so I can move this a bit. Where can we go to? 135.20 is also an extension of the setback here. The first extension is 135.20. It's also a level that has been traded in the past, which is interesting. And then sorry guys, did you lose me? Am I back live? Can somebody confirm that you hear me? Oh, okay. Um, yeah, all right, thank you. So where can we go to? 135.20 first, but then I would keep a very interested eye on 136 if we get there, because it is the yeah, it is the top line of the prior highs here. And then if that wouldn't be enough, but maybe that's a bit too far for this session. Okay, I think there's going to be an extremely important level up in the 137s, 137 and a half, 137.70. Very important. Okay, but one step at the time, as I always say. Just always good to keep the long-term levels in mind. 135.20, 136. On the downside, obviously, we've got intraday this level 134, 40, 45 again, but then especially if the dollar would gain traction again and start to strengthen again for some reason over the course of the day, that 133.90 figure is going to be very important, I think, because it could be the gateway for a move all the way back down to 133, the figure. But for the time being, very, very big. Okay. Um, what else? Yeah, Aussie dollar, always have a look at Aussie dollar. And that one was the other interesting one for me yesterday. After the rejections that we had up here before, um, we went back down here and then one, two, three tests of 63.90. I mentioned that level, very interesting in our room. And then what happened yesterday? Even when the euro dollar tested the downside, cable tested the level. Aussie dollar, that 63.90 remained untested, and I found that interesting in itself. And as a matter of fact, now we're pushing a bit higher again. We are pushing against those prior highs that we saw here. Interesting, obviously, but I would like to draw your attention to two levels up. Higher up is the 64.80, and here this zone here developing. Okay. So I think if it goes above this and then confirm above 64.80, we could get back into the 65s for a starter. But we have the prior high here, and this one is an interesting, and for me, a very important one. If ever that would be reached, there's a 65.5. And 65.5 is really going to be the level to monitor, in my opinion, on the way up. Because if it goes, it could be a quite explosive as well. For the time being, we trade inside the channel. It is positive because we held this one as well. So I have make a note of that level if you want, because if 63.90 one day would give way, because we have seen supports up there, that we could be starting a bigger move lower as well. But for as long as that does not happen, we have to look at it from a positive angle, especially that we see the rest of the dollars as well, dollar pairs under a bit of pressure. Okay, dollar cat. So I'm going to just go back, just go back in time just a little bit. I said, I already said that this was like a very important support zone, and we needed to get back above 139.40 to start going higher again. Well, we rejected 140 and then started to come and then came back below. This is this really I did not have the position, but it underwhelmed it undermined my idea that it could continue to push higher, and then back below 139.40, the music stopped for the dollar cat. But now we are back here, and as I was already mentioning before, to me, this whole zone here between 137.1015 and 138.1015 is very important. It is also one of the prior lows, but everything, all the levels and trend lines, triangle, end of the triangle, it all points at this zone being very, very important for the dollar cat. This is not really an intraday picture. Everybody is obviously free to trade the way they want all the time inside ranges of or whatever. But looking at the medium term, this is really important. What I would ideally like, is to get a test of the lower end of this support zone, and then tell me what is going to happen next, because a break could really take us quite far. In turn, if we hold this again, this zone, then I think we may be in for something bigger to the other side. Okay, so that's why I wanted to show you the dollar Canada today, because I think we are getting into a very, very important important zone here. Dollar yen downtrend, don't change a winning team, and also in line with the holds in the cable, in line with the holds in the euro dollar, in line with Aussie dollar not finding support as well. Dollar yen found resistance right in this little cluster of lines just above 144. Couldn't really get much higher. I was kind of hoping for a retest yesterday, that thing would have been closer to closer to 146. I was hoping for a bit of a rally up there, but the way UEDA speaks, the way the CPI, it's not the non-negotiations on effects have not given me the bounce that I was hoping for. So now we are back here. We're turning around this 143 and a quarter. I'd say watch what's going on here. We could argue that it held, shyly held a bit of, or we are trading around the trend line, but I find it too close, and the yen is too volatile to put in such a short-term trend line. 142.80, if we start to get back below there, there is a risk. There is a risk that we are going to have a test of this more longer term trend line around 141 again, where we also find the 88.8. I think this may be, providing that the other dollar pairs also help along a little bit, and that risk is not really rebounding massively to weigh on the yen. But I think it is within the possibilities now that we are on our way to those levels. I know that some people are looking at it completely different. Some people think that that move down here to 142.80 was it, and that we may consolidate a little bit and then start to go back higher again. But this picture doesn't tell me that we are ready to do so. So I'm always very cautious with yen. I've got an option running in sterling yen because I can't get myself to I don't want to really get involved too much in those swings intraday. So and I don't want to spend money away if I would be wrong on a cash position. So I prefer to do it via options myself. What else, guys? Just let me know if you want me to quickly look at something. Gold also held on the first line, just in line with the rest of the dollars, basically, and is now moving a bit higher again. But just bear in mind that we have interesting resistances coming up as well. Okay, 45, 55 will have their own importance, but then what's waiting here to me is important. I know it's been trading along, it's a prior high, but it's really to me an important zone. I know there is this 3400 as well, but if this would break this 33 70 85, I think we could be off to the races again. Okay, so this is the one that I'm personally finding interesting because we had rejections, we had another top. I think this is going to be the real interesting one. Of course, on the downside, if we fail again, 32.80, 32.40, 50, or we'll be waiting before the bigger 31.65. Okay, so keep an eye on that zone if we push against it at some point. By the way, if you look at the US 10s here, I'm quickly going to look at it. We had a move above 460, but are now also rejecting it a bit. And that is, of course, having to do now with the relative weakness in the dollar, I mean, also has to do with this. But I just want to remind you that if you look at the US yields, the other yields could be following as well, okay? Because if the EU yields are following a little bit less because we had those German numbers out. But if you look at the rest of the years, they are all cooling off just a little bit. So you see the importance of the that the US yields have on all all the yields globally. It is still there. I'm not going to say it's a complete one pot of net, but the correlation and the US driver is still there. Okay, right. What do you want to look at before we go, guys? Dollar Swiss. We haven't really well we came close, yeah, at a certain stage, and we rejected again. So It is confirmed this 83 day figure. I actually haven't seen it move there overnight. Has it? Okay, maybe, but I'm not sure that this is a. Oh, I missed that move. That's a shame if that's a if that's a real move. But it's still a very big big zone and confirmed again. S&P, yes sir. Okay, we know that this zone here was a bit of an important zone, and I also said that this one here, 59 flat and around 58, 55, is a bit of a zone. So on the day, Mark, I think we need to watch both ends of 57.90, okay, or 59.05, and that's going to tell us where S&P wants to go for the rest of the session ahead of this longer weekend. Okay, I think this is we're kind of neutral from here, and we need basically to break 90 figure oh 05 on the top side to find a fresh impulse. Okay, that is something that you have to wait for now. I think people will perhaps try to find bids there. Yeah, 57.70 as well is going to be an interesting one. So this 57.70, 57.90 is one to keep an eye on. Actually, also a bit of a low here. Okay, on the support. With the yields coming back down, euro weakening a bit, it could be that we find some relief if you look at the if you look at the Russell, if you look at the text, we could find some relief there. So I'm not going to exclude a return to 59s and perhaps even above for to close the week, especially if there's a bit less stress on the although the tens are coming back, but the fives, yeah, it came back like 10 BPs. Yeah, the 20 is also coming back. That should give perhaps a bit of relief on the S&P as well, right? Um, Sterling Kiwi. Oh, there's an interesting one. I'm not sure. Oops, hang on. So I'm going to get rid of that one. Sterling Kiwi. Yeah, positive. I think positive. But Liz, we've seen sometimes those antipodians being a bit less perky than other stuff like Sterling, for instance. This is positive. Huh? This is very positive in my opinion. 220, but I mean oh, sorry, I'm on a very long term. This is probably not what you want to see, but even in the shorter term, positive. And that brings us back to what I said on the top of the show or in the middle of the show. Sterling is looking good still. Okay, whatever happens in the rest, if you look at Euro Sterling came back to low 84s. Even Sterling Yen is still in the 193s. Sterling Aussie, for instance, has also kept bits on retracements. I think this is a picture which is still looking relatively positive. Do you want to look at it in real short term, or is this okay? I mean, I'm still this is still painting a positive picture, especially that we are not too far from that prior March high. We've retested it and coming back a little bit. So you may argue that that's a little rejection, perhaps, but you, oops, no, that's not what I wanted to do. Unless this comes back below, start with yeah, 226, 1535. But especially I would say 225 and a half for as long as it stays above. This is still looking like a positive picture. Yeah, the dollar mixed. I mean, it was a relatively perfect move yesterday. Um, Well, a few of us in the room went short again against this trend line here, which really did a perfect job, and now we are coming down again. Well, my zone remains unchanged. I want to see what's happening in the 1905.20. I think we can get there. If it breaks 1905, though, and I mean that's probably we will probably be on our way to 18 and a half again. Yeah, short is still the way to be, and the good thing is that we get paid to be short dollar mix right now, especially if you look at the US yields coming back down a little bit, like the twos are comfortably back down below 4%. This is one that could actually be in for a test of this zone over the day. Uh, Ali, let's look at the, well, okay, I'm quickly going to look for it. Is it ready to break 94? No clue. But we've tried so many times. It is just, I don't know. I mean, I don't know. We have tried so many times. Euro is doing better. That's the reflection here. But do you trust the Swiss? I don't know. Especially with that rejection of $83 Swiss. I really don't know. I will reserve my answer for when I get the confirmation of this one. And with that, ladies and gentlemen, let's close this week. Thank you all very, very much for being with us every day and throughout the week. On Monday, it's a bank holiday. It's also a US holiday. There will be no Forex analytics shows. There will be no flow show, no face show. So, Bran, don't come asking us if you missed the show on Monday. There won't be any show, okay? Only the private ones, perhaps for I'm not even sure. You'd have to ask Blake on this afternoon if the private shows will be live or not. But for us, this is a long weekend, so we talk to each other back next Tuesday. Thank you very much, everybody, for being with me today. Have a stellar weekend.